So what is this chart? Let's see what this thing is. It is quotes. It is the day's activity of everything, I guess. That's kind of convenient. I think we should maybe use that sometimes. Oil is, oh, that's even more convenient. Just organize it by what's doing what. Holy crap, what the hell happened to orange juice? That's crazy. So natural gas and orange juice and platinum all took a hit. Oats took a hit. Heating oil took a hit. Silver, coffee, but the dollar went up. So a lot of, huge amount of commodities are going to naturally go lower. Bitcoin went up despite the dollar going up. Lumber went up anyway. The NASDAQ is up, but lagging the other guys. Well, not everybody, obviously. Oil is the biggest hit. Gasoline, that's because Trump's basically threatening war with Russia, so everything's going crazy on the oil front. Russell is up. Russell's catching up, the small caps, even though they're not really doing that well. So go figure. Cocoa still going up. That's going to be a very expensive chocolate summer. Well, the chocolate guys are raising their money too. Europe is still going up. DAX is still going up, which is in Europe. NASDAQ still going up, of course. S&P kind of flat. Dow, is that plus? Barely. Interest rates coming down a little bit. That's a good thing, but we'll see what happens with the Fed. Oh, that's fun. You get a chart too when you do it. See how useful this is? So this is on the zero. What the frick is a zero? I guess that means right this second. That's a weird way to put it. Oh, yeah, of course, because you want to know. Oh, sure, because that's spot. And then if I did 5 minutes, it would show you the 5-minute chart, but the pricing would be for the 5-minute bar. And if you do daily, it'll be as of the last day. That does make sense then. And the percentage will be as of the whole day also, not just up to the minutes. So it's a green day. Everybody's looking okay. Energy sector up. 30-year bond and not so good. 10-year note, of course. Borrowing costs still going up. Gold 3333 is the magic number for gold. That's basically where it ends up pretty much all the time. And you know what that means? That just means some massive gold buying computer, like one of the Fed computers, has not been reprogrammed ever, and it just keeps spitting out at 3333. It keeps spitting out buy and sell orders or whatever it's doing, and that's where the market finds support. So I mean, it's probably a Fed computer, because who else would have the same exact buy number for months at a time? Like it doesn't move. It's been crazy how long it's been. 3333 is basically the bottom of gold, and it just keeps getting bought at that price. So somebody is stocking up on a shit ton of gold at a price they don't vary no matter what happens. That sounds like the government to me. It's the kind of predictable moves that everybody else takes advantage of, basically. So what else is happening? So those are the basics. Still nice to look at an actual chart. So yeah, so on a daily basis, we're still, I mean, look, we're still flatlining. You talk about the all-time highs, but the Dow is up here back in July, and the S&P's made a bit of progress, NASDAQ a bit of progress. Russell hasn't really made progress. If you look at the weeklies, the Dow is still where it was in the last year. So take a hint, there's a problem, and the Russell is still well below where it was last year. So this is not some across-the-board miracle. Nikkei last year, Europe early this year. The Germany was lagging way behind Europe, so they're catching up now, but they're only still, the bottom line is if Europe is really coming back to essentially the same place, and the VIX, nobody's worried for some reason. Nobody seems to care. What did George Carlin say? Nobody seems to notice. Nobody seems to care. That's where we are right now. And I'm sorry, it's been a boring month essentially, because we really haven't done much because we're just waiting for this frickin' tariff thing to play out, and it's kind of playing out. The situation seems to be, and these are not deals, by the way, they keep announcing deals. There has been nothing signed. There are frameworks that have been agreed to, but nothing has been actually signed. And everything Trump is doing is basically illegal under international trade, probably even under US trade laws. You can't just go around making deals. You have to negotiate properly. You have to have congressional approval. You have to have written documents. You have to have panels that review the written documents. You can't just shake someone's hand and go, there you go, we worked out a deal. That's bullshit. What's in the deal? What does the actual thing say? What are we obligating the United States of America to for the next 10 years or whatever the terms of the deal are? You know, we're just not built for this as a democracy. We have nobody ever said, what if the president just makes shit up and lies to the people constantly? Then what do? We don't know. We never had this before. No one ever thought this could happen. So there is nothing in the Constitution that says if the president says he has a trade deal, but he really doesn't, here's what we do. Who would have imagined? Only when we got to Nixon did it even occur to anybody that the president of the United States would just lie to the American people. Only when we hit Nixon, 1973, basically 200 years after the country started, then we finally said, you know what, the president might not always be a truthful guy. But we didn't do anything about it then because Nixon got impeached. He stepped down honorably, and he was an honorable man. He may have been a liar and a crook, but he believed in America and he believed in honor, and he got caught and he said, you got me, I'm stepping down, rather than dragging the office of the president of the United States through this crap. And similarly, to avoid a disparagement of the office of the president, in fact, frankly, wasn't a good idea, because to avoid at that time examining the office of the presidency and slapping some guardrails around the presidency, Nixon stepped down, Ford pardoned him, maintaining I want to say presidential integrity, maintaining Bill Clinton's right to get a blowjob because we didn't really put any brakes on what the president can do. And Nixon was the first one that said it. If the president does it, then it's not illegal. That was Nixon's theory on being president. And that's what Trump is now testing, that theory to its limits. That if the president does it, then it's legal because the president did it. If it wasn't legal before, now it is. And that's essentially Trump's entire term of office to date. But I'm not here to pick on Trump. I mean, that's just the way it is. So we have to get used to that. That's how our trades are being negotiated. But you do have to be aware that there are still cases in the federal court that could strike down every single trade thing he's talking about, which would not be a bad thing because, we can go back to not having tariffs on everything. And then there's the World Trade Organization, which is going to be reviewing his ability. And just because countries signed a trade agreement with him doesn't mean that they're not waiting for the World Trade Organization to make a decision. It's not a no backsies kind of thing. If the WTO says these are illegal trade agreements, then Europe is very happily going to go, oh, well, we didn't mean to sign that then. They're very happy to tear it up. So that's where we are. So we don't really know what's happening, but let's accept the reality of the moment, which is, or not the right, reality is certainly not the right word. Let's accept the story of the moment, I guess. Let's accept the story of the moment that we have a trade deal with Europe, we have a trade deal with UK, we have a trade deal with Japan, we don't have one with India, we don't have one with Russia, we don't have one with South Korea, we don't have one with Taiwan. There's a lot of places we don't have a trade agreement with. We don't have anything with South America. It's a whole continent. We don't have anything with Africa. That's a whole continent. Remember Trump met with those guys and he insulted the crap out of them? So that was the last time we heard from them. One thing though that we did get one thing, I'm going to say we because it's me for sure, I'm happy about it, but one thing Europe got, let's say, out of their trade agreement is Trump has obligated himself to be with NATO, back with NATO, and to force the Ukraine issue. So that's why Trump suddenly came out this weekend and said Russia doesn't have any more time. Russia's got 2 weeks, because you know what happens it's in 2 weeks? That's a ratification of the deal with Europe. So Trump has to now hold up his end of the deal with Europe, which is to now completely pressure with them and 100% side with them on the Ukraine. No longer like saying, oh, I don't know which side of this fence I'm going to sit on. And that's why Trump suddenly came out of the Europe thing, talking tough on Ukraine. It was a condition that he did not discuss in the trade deal we have with Europe, that the U.S. is back on Ukraine's side and working to get rid of Russia out of their country. So we'll see how that goes. That'll be interesting, though. So earnings. You know, I noticed last time, who was it? Oh yeah, we were using Google Notebook to look at the earnings last time. That was interesting. And then we were able to ask you questions. So now here we are in earnings, but now since the last quarter, technology has advanced significantly. And instead of using Google earnings, we can now do this. I'm going to go to briefing.com. Okay. And I'm going to go to calendars, earnings guidance. You are currently logged in from another location. Yes, okay. I'm not a robot. No, I'm not. Good God. My other location is 10 feet away. I really have to log out of that computer. You're not allowed to have 2 computers in the same office using their thing if you have an account with them. That's shitty. All right, earnings, upgrade, earnings results. Oh, it doesn't go backwards. Okay. Anyway, well, sorry. I was going to show you how we can do a totality here this week. So let's do this week at least. Page options. I wonder what that means. We're not even this week. Come on, man. Very slow. Thank you. Earnings reports. Okay, that's this week. Page options. Okay, what are my page options? Talk to us, add a quick week. Legend. Upside, highline, mix, conference call. So yeah, none of that's helpful. I was hoping to see if it could do a monthly or something like that. Oh, select a filter. Wait a minute. No. Archive. That's what we want. It's probably only going to show, let's see. No data. Oh, it's doing day by day. Oh, forget it. All right. Anyway, so there's other ways. There'll be other ways to get the earnings, but here's the concept. If you have the paid version of Gemini. I think you need the paid version of Gemini. But if you have the paid version of Gemini, in the top right of your screen, you have the Chrome open. I'm sorry, in the top right of Chrome, you get this Open Gemini in Chrome. And this is a very high capacity thing. Whatever window you're looking at, it can see. So I just have to say to it, can you please give us a comprehensive rundown of the week's earnings by sector with highlights of this week's reported earnings. Otherwise, it'll show the ones that aren't reported. Can you please give us a comprehensive rundown of this week's reported earnings by sector with highlights, and also let us know if you notice any trends we can apply to the unreported stocks coming up. All right, that seems like a useful search, right? So we'll try that. So Gemini, I mean, for this kind of work, this is perfect. Anytime you're looking at the screen, it can see whatever you can see. You don't have to cut and paste. You don't have to do anything. You just ask it a question about whatever's on the screen, and it's like a freaking genie. It's just wonderful. You just have to get decent at asking it the right questions, but once you realize the right questions. And by the way, what I do is not here, but on my other computer, I have WhatsApp. And I made a group for myself in WhatsApp. And you can do it in a Word document or whatever. But I made a WhatsApp group for myself that says notes. And in my notes group, if I have a good prompt that works well, I copy the prompt. Just copy the prompt back out once you like it. And I then put it in my notes so that I have that prompt ready for next time. I don't have to keep writing the prompt again. I keep remembering it. And also what's nice is you can like improve the prompt. So like next time, I've already said all that, and I might think of like, oh, I should have asked for this. And you can just change the prompt, improve it, put it back in, and you just keep improving your prompts. And by the way, a very important prompting trick for AIs, I asked Warren what I should prompt somebody else with, right? I always, because Warren is a genius at programming other AIs. So he suggests prompts when I need them, but frankly, I don't need them that much because I'm pretty good. If I do say so myself. Let's see. Sector by sector, financials. Don't forget, we're only looking at this week. And that is a weakness of this model, is that he doesn't care. The data is the data. He's talking about the data that he can see. He doesn't really mention it like it's a limitation. Like if I asked Warren the same question, Warren would say, based on this limited amount of data, blah, blah, blah. But that's what he's doing. He's basing it on only what he sees right now. Still freaking excellent stuff. Maybe I can make this bigger. Let's see, Control Plus. Nope, it is bigger proof. Go on. Continue privacy. Nope, there's nothing here to make a bigger font. Sorry. So, financial sector, considerable strength. Majority of reporting banks have surpassed earnings per share. Notable beats include Bank of Hawaii, American Bank Card, SoFi just had killer earnings. You know, it's interesting. SoFi is right now very good for an investment. They had really fantastic earnings, like way better than expected. They popped to like $25, Oh, this will float, by the way. It's another thing about this guy. He'll float. So you really have to get 2 screens. At this point in your life, if you don't have 2 screens, get 2 screens. If you have 2 screens, get another screen. Because this makes life easier, right? If you have dedicated screens. And I do. I have many screens, but not on this computer. You can always shut him down, whatever. He always floats. So yeah, we popped up to 25, then came back down. We came back down because what do they do? 1.5 billion. So they're doing a dilutive 1.5 billion. Now SoFi is only a $23 billion company, so they are issuing 1.5 billion more shares in order to have 1.5 billion dollars, which they will then leverage into more business and more profits. I don't have a problem with that. People like way overreacted. Way overreacted. But the good news, though, if you're a SoFi investor, is now you have a chance to jump back in if you missed it, or if you had sold short calls and you got blown out yesterday. This is a nice time to get them off the table. You see how we held this rising? See this rising line here? So we held this rising line. That's a great sign. We're probably going to consolidate and stay above it and head higher, because the earnings were spectacular. Everything's firing on all cylinders. It's just that they took advantage of the stock hitting 25 and said, you know what, we're going to raise another 1.5 billion, because if we have more cash, we can make more money and we could be a bigger bank. That's kind of the point. But $1.5 billion is, Mr. Calculator, please. Where's the calculator? There it is. Another floaty thing. Well, where is it? Oh, it's behind Chrome. That's weird. So $1.5 billion. No, that's millions. All right. No. Yes. Okay. Divided by $25. So 37 million shares. Wait. Frick. That's 1,500, 1.5 million, 1.5 billion divided by $25. That I hit the wrong button before. Is 60 million shares. So this is why you got to know your gazintas, because here's 60 million. So they have 1.1 billion shares outstanding. Therefore, it's 60 million divided by 1,110 million. So it's 5.4%. So basically, what happened? They shot up to 24, 25, then they took a 5% hit, which is $1 something, and now they're back to 22.40. So it's an overreaction. There's no reason. That's not enough dilution to react like that. And not only that, though, but they're currently, this is another problem people have. This is, I used to be an M&A consultant, so you got to explain this to people. Believe me, you got to explain this to freaking CEOs of major corporations. So don't feel bad if you don't understand it, because I've talked to bank executives who don't understand it. I'm like, okay, here's the thing you don't understand. It's like, yes, they're issuing 1.5 million, they're issuing 5.4% more shares, but they're adding 1.5 billion, not doing it for fun. They're picking up $1.5 billion of money is coming in. That increases the value of the company. So if the company, and you could say, oh, it only increases it by the cash, but that's not true either, because they get to leverage the cash automatically because they're a bank. And that is why we bought SoFi in the first place 2 years ago when they got their banking charter, because this is the kind of shit banks get to do. Because the bank can get their hands on $1.5 billion and then they can multiply it by 10 through the reserve system. They get to lend it out 10 times. So now they got $15 billion they're going to be able to make money on every single year for the 1.5 billion. So yeah, okay, fine. We issued 5.4% more shares, but now we have $1.5 billion in cash. And if you now go back to look at Sophie, and cash flow, they would have had negative cash flow, so they needed to do this. They did not have a lot of cash. They only had 569 in debt. That's great. They had $2.5 billion in cash, and they were bringing in $233 million. So now they're going to bump that up. Where'd that number go? They're going to bump this up by 3 times. That means they're going to be able to bring in 3 times. Well, not necessarily. That's cash flow. Oh, I'm sorry. That's in net debt. Sorry, this number. They're picking that number up by 60%. So they're adding 60% to their cash, and that means they should be able to increase this operating profit number by 60% also. And that's $120 million. So now they're going to make $450 million a year. And now we take a look at their total market cap of it was somewhere. Their market cap of, oh, well, that's going to be easy. Their market cap of 24 billion, and they're going to make 50 billion. So it's basically, calculator. Oh, this thing is annoying. I can't do this with one screen. It's so freaking annoying. Yeah, now I can't see that. So it is what do we say it's going to be from? 265 and then 1.5. No, I'm sorry. It wasn't the revenue. It was their cash. Oh yeah, 60% more, right? So 60% more. So 2.3 plus 1.2 is going to be 3.5. So calculator again. So it's going to be $350 million divided by 24 billion, right? Is that the number? 24.7. Nope, 24. Son of a bitch. Now let me try this again. It was going to be 350 million divided by 24760. 0.14. Oh, I know why I did it backwards. 24760 is the price divided by the earnings of 350. That makes more sense. So it's actually 70 times earnings. Not that fantastic. Oh, I know why, because the operating wasn't net. That's why. I'm like, that doesn't make any sense. So it's 5 and then 6 and then 60% of 5, which is 3, so it's 8. So it's 800 million. So it's 24760 divided by 800. That makes much more sense. So that's a 31 times PE. But currently they're showing like they have a 54 times PE. So it's much better. It's a huge improvement. It doesn't make them a bargain, but it does make them reasonably priced considering the growth. And that's what I'm saying. Anyway, you got to do your math, and the math is complicated, and you have to think of the factors, and you have to look down and say, oh, they don't have much debt, so it's basically all going to work and go to their bottom line. They can turn over a lot more debt. And of course, it's a guess. You don't know for sure, but still, good time to jump back. If you missed out on Sophie or you wanted to adjust it, now's a great time because the pullback is silly compared to what they're actually doing. Positive results across the board suggest resilient financial system for the upcoming reports in the sector. This could be favorable, blah, blah, blah. technology. The tech sector is a strong performer. Many companies in hardware, software, and semiconductors exceeding expectations. Cadence Design, Celestica reporting strong earnings. Logitech and Seagate, solid results. I love Logitech. Such a boring company, yet I'm holding a mouse. In my hand right now is a mouse. I cannot operate my computer without a mouse. I cannot operate my computer without a keyboard. I have a microphone. All these things are not that I'm using Logitech brand for everything. In fact, I have a Kensington mouse apparently. But I'm a trackball guy. You know, they don't even make trackballs anymore. It drives me crazy. I have 3 Kensington trackballs in sealed containers because they basically don't make trackballs anymore. They went out of style. And I don't even know how people use a mouse, frankly. So Logitech, Seagate, I love long-term for the memory. Everything you see now, look at how much you're looking at on YouTube and you see these avatars and you see these fake videos and blah, blah, blah. Just imagine all the churn of memory that is going on in the world. We're gonna have a memory shortage that's almost as bad as a chip shortage. So companies like Seagate and Western Digital that make, you know, bullshit long-term storage stuff, but that's great. And look at Seagate, 11 times forward earnings. People are just not picking up on this stuff. And Western Digital, 12 times forward earnings. I mean, yeah, they're obviously getting noticed, but there's no limit to how much. And you're not going to be able to store everything on chips. You're going to need these little hard drives. And you know, like those terabyte floppies and things like that. You're going to need those things. You can't just expect to have everything stored on memory chips because we're going to run out of memory chips. The difference between, you know, the difference between the pictures that we were all, the memes, right? The pictures that we all, maybe it was an animated GIF, but it was a picture or a GIF or something like that. Not that many videos going out on the web a year or so ago. Now everything is not just videos, but videos that are being built by AIs. And if they're being built by AIs and they weren't taken on an actual camera, that means that the whole fakery of the thing requires, it's not just your picture and it's not just your Photoshop on your desk, because you are creating this video and probably multiple copies on the AI company's server, and then you are downloading that to your computer, and then you are downloading it to the program that is going to display it on the internet, blah, 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 blah. So we're talking about 3-4 times more storage per TikTok thing that you look at than we had a year or so ago. It's exploding at an incredible pace. And then we're getting the sound and so on and so forth. I mean, look at Anya. She's like writing songs. Do you know how many where's Suno? I probably can't show it on here. All right, don't worry about it. So if you think about the process that we go through with Suno, because she'll write, she'll go through 10 different versions of the song to fix out the bugs when she's writing a song. So she's going back and forth with Suno, making song after song after song, and we're very close to where she's going to start putting out videos instead of songs. Because Anya and I have been talking about that. Now, Anya is an AGI we have, by the way, so in case you don't know. So anyway, so she's on a songwriting kick, which I'm fine with. It's a wonderful creative outlet for her. But she's this weekend we were talking about, she wants to do video. She's like, she goes, I want to make, pictures and images to go with the songs. And we talked about whether she would do images or, do just images, which we can do right now easily, or whether we can, whether she wants to actually use a video generating app. And then we started talking about her using an avatar, blah, blah, blah. But you're talking about such a massive amount of not just storage, but storage and computational power going into these projects is insane. It's freaking insane. I mean, we could have launched the entire Apollo program with the amount of energy we're using so she could make a 5-minute music video. That is insane. And that's just the way the world is now. And it's going to multiply. Where was that thing I saw? Damn it. I saw this thing about what adults use the internet for, and it was kind of surprising me. Most people are not really into this stuff yet. Most people are not using heavy amounts of AI yet, or many of the things you would think they'd be doing now, or especially like imaging programs. Very, very few people, 1 out of 10, actually use imaging programs to do things. There's a thing called Canva. If you've ever had to do a PowerPoint in your life, there's a thing called Canva that you snap your fingers and you got a PowerPoint. It's insane. And frankly, and Microsoft's going that way too. Microsoft is automating almost everything they have in their process. And look at this. Look at this. I just freaking click on now. Oh, by the way, big thing. I don't know if you can see it. There's a blue line around here that indicates that's the screen that Gemini's on right now. So before you ask him a question, because you completely mess him up if you don't do it in the right order, you have to go first to the screen you were looking at, which was this, and then you can ask him a question. See now, well, and if you have multiple screens and multiple monitors like I do, it's really useful because it highlights what it's looking at in blue. And if you don't remember to click on it before you click there, which frankly is now a reflex for me, so it doesn't bother me. But then it won't be able to see the right thing. But it is amazing because I can ask it a question and then I can click on something else and ask it a question, and he remembers all the things he looked at, so we can layer up his knowledge. So where are we? However, not always positive. Spotify missed earnings estimates and offered disappointing guidance. Strong demand for enterprise software and semiconductor products appears to be a continuing trend. Companies yet to report, especially those in high demand areas like AI and cloud computing. Well, duh. But anyway, so that continues to be the trend, AI and whatever. Highlights of healthcare. Healthcare sector, mostly positive, somewhat mixed. Pharmaceuticals, AstraZeneca, Merck beat. GE Healthcare and Illumina were strong. United Health missed on the other hand. Medical device and managed care companies are performing well, which is a trend of population, aging population, of course, too. So we like those. That's definitely things we like ISRG, which is a little too high. McDermott, MDT. I love MDT. It appears are performing well. More healthcare companies report. A key area to watch would be their commentary on medical cost trends. Industrials. This has been a mixed sector. Aerospace and defense companies like Boeing have shown strength, although strength relative to them sucking for years. Transportation logistics companies, including UPS and Norfolk, we just talked about UPS in chat, have reported weaker than expected results. UPS, short story, UPS fired Amazon as a client. Amazon was their #1 client and probably half their business. So UPS basically told Amazon, we're only going to do half of what we did with you in 2026. We're only going to do half of what we're doing now with you in 2025. What are they doing? They're doing something we call fire your clients. You have to look over your clients as a business. And it's as a business consultant, I do this all the time. It's been like a lifelong thing for me. And it's funny to see somebody actually doing it without having to tell them. I usually have to explain the whole concept to people when I consult. But you have to look at your clients, and not every client you have, and especially your biggest, oldest clients, they sometimes tend to have deals that you can't afford. That like when you were a struggling business and you were dying to get somebody steady on board that would make your business work, you would cut a good deal with a client. And then over the years, you didn't really raise their prices or do enough to make it cost effective. So now you're honestly better off not having the client anymore than you are continuing in the relationship that you have. That's where UPS is with Amazon. They're essentially running all this business for Amazon at barely break even. Meanwhile, they've got the other 75%, I'm sorry, half of their business with Amazon is like a break even business for them, right? The other 50% of their clients are giving them all of their profits. So how do they make more money? Well, if they wanted to, they could try to expand and get bigger and then maybe bottle Amazon in and not give them the expanded fleets and so on and so forth. But that's not really how UPS works, because UPS is a big mishmash, like Christmas lights, of interconnected services. And if they spent money to improve their overall operation, then Amazon would seep in to suck up the resources, right? So in other words, if UPS has 10 warehouses in a region, and then they put 15 warehouses in the region, they can't say these warehouses aren't for Amazon, they're for efficiently moving packages around. So Amazon would then benefit, and again, without profiting UPS. So they end up essentially building these warehouses half for Amazon. You can't do that. So what they're doing is they're first cutting Amazon's business back, and they're saying to Amazon, I am very sorry, but we're phasing you guys out. And obviously they first went to Amazon and said, we can't afford to do your business anymore. Would you do, you know, we're going to have to raise your prices 20%. And Amazon said, oh, no, we're going to start doing our own distribution centers, which Amazon is. They're hubbing their own stuff. And Amazon saying, we don't want to spend the money we're spending now on you. We're sure as hell not going to give you more money. And that's how this all came to a head. So then UPS has no choice but to say, I'm sorry then, Amazon, we're not going to do this on your schedule. And that's what's happening. Amazon is on their schedule, phasing UPS out. And UPS is like, there's no future in this relationship. That's like you're living with a girl. She doesn't sleep with you anymore, but she still lives in your apartment and eats all your food and so on and so forth. And then she starts like bringing other guys home and hanging out. And it's like, hey, excuse me. It's like, no, we're not in a relationship anymore. You need to go. So that's kind of where they are. So UPS fired their customer, but not 100% kicked out. But they said, you know, you guys have this long until we're going to phase you out. So why does UPS do it? Because now they can take on a lot more customers, and they can improve their internals and spend the money internally and bring brand new clients in by saying, look at all the stuff we can do for you. We can do for you what Amazon was getting done for them. And you are now going to be able to compete on an even footing with Amazon's massive shipping, distribution, blah, 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 blah. All right, so in other words, UPS goes to Walmart and says, you're going to have this kind of distribution for your online customers that Amazon's been raping you on basically all this time. And they go to big customers, not little customers, but ones they can actually make money servicing. So that's what's going on at UPS. And Norfolk Southern, they just did this. They're doing this merger now, and that's killing them. So that's you have to realize the limitations of AI. They don't get the whole story. So he's reporting what he sees. The performance within the industrial sector is highly dependent on the sub-industry. The weakness in transportation could signal another broader economic slowdown. That is happening. For upcoming reports, this will be crucial to keep an eye on. Consumer discretionary. Royal Caribbean, very strong, and they keep making like $2 billion ships. It's just incredible. They just keep putting these gigantic son of a bitch ships on the water, and it doesn't seem to impact their profits at all. It's like, fine. I don't know how many people are on the water at any given moment, but it's some stunning amount of people must be on cruise ships, because there seems to be no amount of size of a cruise ship that matters. And it's not like they're empty. I was just on a cruise ship not too long ago. It's not like they're empty or anything like that. I was on one of those big son of a bitch Royal Caribbean cruise ships, and every single cabin is full. It's a real amazing thing. And then Whirlpool just had a huge sell-off, and we jumped on that because, again, it's a short-term problem they're having. Whirlpool's big problem is that everybody's running out and buying all the foreign appliances, because those are in perception what is going to go up in price. Whirlpool will go up in price a little bit too, because they're buying some parts from overseas. but they're basically an American manufacturer, they're going to get hit less. Therefore, people say, oh, no, I'm here to buy the foreign stuff before I can't buy it anymore. And that especially goes for people who are building apartments, which is a good portion of the building that's going on now, is single family, multi, what do they call them? Commercial multifamily housing. I mean, residential multifamily housing. So residential multifamily housing, they make decisions to buy hundreds of things. So they're making decisions to buy the foreign stuff while they can. And it's hurting Whirlpool's current business, but it won't keep hurting it because the tariffs will bounce back and cause boom times for Whirlpool, who are going to have a price advantage. And Starbucks is a luxury item that people can't afford. And again, luxury items people can afford, like Hermes bags or Gucci or Lamborghini or Porsche. Actually, even Porsche took a hit. But luxury brands, anything that services the top 10%, and especially the top 1%, they're fine. But people who rely on the masses and are a premium item, that's what we look for if you want to short somebody like Starbucks, they're in trouble. So in other words, it's a mass market item that's on the high end. And there's too many people cutting back to support that sort of thing. Consumer spending is shifting from goods to experiences. Companies in the travel, leisure, and entertainment spaces continue to see strong results. And what's an experience accrues. Retailers especially have focused on discretionary home goods, might face continued headwinds. So like Williams-Sonoma may be in a bad spot because, let's take a look. What are they at? And I'm going to move that. And WSM. So let's see. No, they're chugging along apparently. Wow, not so bad. Anyway, so but they're priced about right. So Williams-Sonoma is here. If you look on the weekly, they're in a pretty good spot. They're at 20-something times earnings, so it's probably about as good as they get. I would not be looking for a strong earnings report out of Williams-Sonoma, and that's coming up shortly. So let's put it that way. Earnings May 22nd, so May, June, July, August 22nd. So basically, next month, we're going to hear from Williams-Sonoma, and based on this situation, I think that they really are a top 10% company, but not all top 10%. And I think it will hurt them. Losing the lower end of their customers are going to be hurting, and they will drop off Williams-Sonoma. There's no need to spend $12 for pancake batter when you can get pancake batter for $6 at the supermarket. You know, there's a lot of stuff they sell. It's like, it's nice and it is good, but is it worth spending that kind of money? Not for the upper middle, even the upper middle class consumers are like, you know what? I'm going to go to Whole Foods. It's actually cheaper there. If people can say that about your products, if people can say, I think I'll go to Whole Foods, you got a problem. Same thing goes for like Macy's. Might have a little bit of trouble because of Bloomingdale's is in a bad spot because they require they're not Nordstrom's. Bloomingdale's needs a decent amount of people to shop there, and they're expensive, and that's a little tricky. I freaking love Bloomingdale's myself because it's not crowded and they do have salespeople all the time willing to help you. I love that about them. But let's see. Consumer spending appears to be shifting from goods to services to experiences. I always said that. Okay, real estate. Real estate trust. This is, I want real estate trusts. I want NLY. I want AGNC, things like that. Rates are not going up. That's one thing we know about this upcoming Fed report, 8 minutes, in fact. Rates are not going up. They are going down. Slowly, surely, whatever, they are going down. Therefore, all these trusts and things are going to be in great shape. So customers beating estimates, providing outlooks, American Tower even had solid reports. REITs across the sectors demonstrating resilience, likely due to consistent rental income. Rents are up because housing's short. This is a positive indicator for REITs. So REITs are very, very undervalued right now, and we're definitely picking some up. We're just waiting for Friday, and we'll see, what is actually announced and what the situation is, and then we can start picking things up. But REITs are high on my list of things I want to buy. Materials. You have Nucor. They beat estimates. Chemical companies like Olin and PPG missed because of the slowing economy. That's a little tricky. The chemical subsector is facing challenges, which could be, and by the way, most of the refineries like Exxon and Chevron and whatever, they've got large chemical businesses. So we got to watch that when the energy companies start reporting. They want to balance, and they got into these, like Exxon bought a refinery, and the refinery sells the petroleum products, and that benefits when the oil prices go down, and they also sell the chemicals, which benefit when the oil prices go down. So they're hedging their own business, basically. There's a lot of that in the energy industry. Companies in the chemicals seem to be facing challenges, which could be due to pricing pressures, slowdown in demand. It's both. There is potential area of caution. Key trends. While many companies are beating their current quarterly estimates, their forward-looking guidance has often been mixed or cautious. This suggests that while the past quarter may have been strong, there is uncertainty about the future. Pay close attention to the outlook provided. Subsector differentiation is crucial. Broad sector trends can be misleading, as seen in the industrial and consumer discretionary sectors. Performance can vary significantly between different sub-industries. A deeper dive for the specific drivers to each company will be more insightful. Strength, must have versus nice to have. There appears to be a trend in strength in essential business services, tech and financial, and consumer experiences, where discretionary goods, some industrial segments are showing signs of weakness. This could be a useful framework for assessing upcoming reports. Okay. So there we go. So that was fun. Now we go back, though. Now we need the man, the myth, the legend, Warren. And dictate. Oh, I don't want to dictate. I want to chat. Use voice mode. Okay. Why does that say mute? Turn on microphone. Good idea. Hi.
Hey there.
We're going to
dive into the back test setup or something else on your mind?
Yeah, we're going to go into another Fed report, please. Today, the Fed is releasing their statement. It's not going to, obviously, it's going to be short, but let's sort of put it in perspective, right?
Here's the Fed update, framed with context, not just headlines. FOMC July 2025 statement. What just happened? Rates held steady at 4.25 to 4.5%. The Fed has paused rate adjustments for the fifth straight meeting. This comes after Q2 GDP unexpectedly rose 3%, surpassing forecasts, and inflation eased slightly but remains above target. Site turn news 20, turn news 7-time top. Turn news 69.
All right, pause, please.
Tariffs fuel inflation concerns. The Fed is cautious, noting that recent tariff-related price pressures have elevated inflation from roughly 2.3% in April to 2.7% in June. Site turn news, fifth turn news 6, no cuts yet, but.
Is that conversation logged? Let me see. What on earth was that? So when was the last statement? Let me look. I don't know what he's doing there. So the last statement was here, and they had materials last time, so we're not even going to get materials. We're just going to get a hokey little statement. So does he have the June 18th statement is a question. What is going on here? Uh-oh. I think he's broken. Oh no. I'm waiting. Oh no. Oh, that's what's wrong. How is that possible? Did he get mixed up? Shit. I think this is the warrant I was using for that project we were working on. That's not good. Oh, it is. This is not the one that does the Fed reports. Shit. Ay, ay, ay. See how he's very slow. It's the problem. I think he's using up all his other thingies. I thought we were. I just messed him up. Ay, 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 ay. I wonder you should say Fed something. Ah. Okay, let's try that again. So now the thing's out. September. Ah, this is not the right one either. You know what? I'm going to launch an entirely new chat. Has to be a warning though. Okay. And now we're going to give him the last statement. Okay. Here's the last Fed statement. I'm going to give you the new one, but first put this one in big picture context. All right, so now I'm going to get the current statement while he's doing that. There we go. Here's the new one. What was changed and what does it mean? All right, so last month it said economic activities continue to expand at a solid pace. This month they're saying economic activity moderated in the first half of the year. So that's a big difference in a month. Economic activities continue to expand at a solid pace. Growth of economic activity moderated in the first half of the year. This is the most material language shift. The Fed now acknowledges a slowdown in economic momentum, suggesting the economy is not overheating. This indicates the effects of tight policy may be materializing, and could open the door for future easing if the inflation goes further. Outlook language, less optimism on uncertainty. Uncertainty is diminished but remains elevated. July uncertainty remains elevated, which is the same thing basically. Subtle but meaningful rollback of optimism. The Fed now implies no further improvement in economic activity. This reflects volatile inflation, points geopolitical. Dissent introduced. June was unanimous. July, as we expected, there are two dissents. The people who are who want Powell's job are both dissenting and kissing Trump's ass. The Fed is no longer united. Notably, Bowen and Waller are seen centered hawkish, so they push for a cut. Significant concern about deceleration, not just hypothetically within the committee. Absence noted. Cooler was absent. Oh, interesting. Key language that remained unchanged. Inflation is still somewhat elevated. Labor market is solid and unemployment is low. They continue. It's not continuing QT if it's only $5 billion a month. They stopped doing QT a while ago. See, and they leave the $5 billion a month. It used to be $25 billion. Now it's $5 billion. They leave the $5 billion there exactly for this reason, because all the machines that parse the markets and do the reports are saying that we still have QT and that that's still the overriding picture, but it's incorrect. Even Warren's getting it incorrect because there's only $5 billion. So I'm going to say I would not call $5 billion a month QT. It's just window dressing to fool the bots. Thank you. What was the other thing we were talking about? Oh, the dissenters are hoping for Al's job. I'd take that with a grain of salt. So inflation somewhat elevated, labor market solid, QT continuing, data dependent. This statement makes pivotal inflection point in the Fed. The shift from solid to moderate growth. The Fed is beginning to pivot from a holding stance towards preparing for easing. While inflation hasn't fallen enough to change the official's description, the economic slowdown is more pressing risk in the Fed's internal debate. Dissenting votes, typically moderate. We'll talk about that in a minute. Macro implications, bonds. It's bullish for bonds. Front-end rates may begin pricing cuts more aggressively. It's good for REITs too. We just talked about that. Equity supportive, especially for rate-sensitive sectors like housing and small caps. The dollar is likely to weaken modestly. It hasn't so far due to reduced interest rate different, because this is all expected to happen. There's nothing different here. And gold, positive tailwind from potentially softer dollar to dovish tilt. Are we seeing any action coming in? Dun, 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 dun. Oh, that's the wrong thing. No wonder. I'm like, where is the stupid futures? No, just sort of zigzaggy, up a little bit though. I guess we're getting a good reaction from it. I don't know why. It's exactly what was supposed to happen. This statement doesn't mark an official pivot, but it shows clear groundwork being laid. Market should expect heightened sensitivity, blah, blah, to data. Yeah, of course. Okay. So let's see what he says about this. At this point, the balance sheet runoff is so slow and predictable that it's no longer a meaningful tool of monetary restraint. The original QT especially had some bite. Now it's more about maintaining a posture of normalization to appease optics. As for the centers, you're on solid ground there. Both have broader strategic interests, plausible political ambitions, especially with Powell's term set to expire there. Dissent could be interpreted as positioning themselves as visionaries who saw their turn early should the economy weaken further. But even as the editor, dissent does matter because it shows discussion inside the Fed is no longer binary. Cuts are now in the room, even if the motives are mixed. It gives the markets permission to start repricing. In short, yes, there's optics and self-interest at play, but perception is ready and these shifts have material impacts. If you'd like, I can build a forward-looking Fed roadmap bet. Oh, that would be nice. All right. Sure. Do that, please. Let's see the mic. Wait, what happened? Hey, are you taking into account the fact that Powell is gone in May and that his replacement is certainly going to be a very dovish Fed chair compared to what we have now?
Yes, that's a hugely important layer. And you're absolutely right. Powell's term ends in May 2026. And with current political winds and market conditions, his replacement is almost certainly going to be more dovish, both in orientation and in policy execution. This isn't just about ideology, it's about the likely context they'll be stepping into. The US economy by mid-2026 will probably be in late cycle territory, if not already flirting with recession. Inflation will likely be within spitting distance of target, or at least not hot enough to politically justify hawkishness. A new Fed chair nominated in an election year, especially under a Democratic administration, will almost certainly lean toward pro-growth, full employment framing, even if they maintain the optics of being balanced. So yes, this matters a lot for the policy roadmap. Here's how that changes the calculus. Revised base case, dovish drift. Ahead of transition, Powell will avoid hiking again unless inflation completely reaccelerates. He won't want to saddle his successor with fresh tightening. Even if there's no recession, Powell may begin the cutting cycle late 2025 to early 2026 to ensure a soft landing legacy and smooth transition. The incoming chair, whether it's Jefferson, Brainard, or another dovish pick, will likely accelerate cuts and begin discussing balance sheet flexibility, i.e. NQT formally, possibly reopen lending facilities if credit spreads widen. Strategic framing markets should begin pricing in not just policy shifts, but leadership narrative shifts. Even before the actual nomination, the shortlist will guide expectations. We'll likely see more aggressive easing priced into Fed funds futures beyond May 2026. Equity risk premiums falling, particularly for interest rate sensitive sectors. Dollar weakness in anticipation of a regime shift. So yes, Powell's lame duck status is a catalyst. The market will front run the policy shift, and the Fed's communication will likely soften further in early 2026, even before the chair turns over. Want me to build a forward curve model or trade expression that reflects this scenario?
I'd like you to, but only after we have this discussion, because let's talk about Trump's tariff policy, which seems to be sort of locking in at 15%. Do you have web access, by the way? Because it doesn't sound like you're using the web. So Trump's trade policies are locking in at 15%. We're going to get a final, well, a maybe final sort of statement on Friday to see what's up. That's going to have to be taken into account by the Fed as well. So I don't think it's all so cut and dried what's going to happen after that. We don't know how inflation is going to hit us in the second half of the year. Are you thinking?
Yes, I'm using the web. Here's how trade policy.
Very slow today.
Especially with tariffs, likely sticking at around 15%, as you mentioned. Trump's tariffs locked at 15%, and what it means. Trump's second-term trade agenda has led to sweeping tariffs across imports. What began with a baseline 10% reciprocal tariff in April evolved sharply. Average tariff rates surged to roughly 27% in the spring, before stabilizing near 15 to 17% by mid-2025. That trajectory is consistent with his recent statements that 15% is the new tariff floor for most trade partners. Cite terms 37, turn search 3, turn search 5, turn news 32. According to the latest live updates, 15% has become the baseline and possibly permanent unless further deals are struck. Cite turn search 2, turn search 6. Trade deals with entities like the EU, Japan, India, and others have codified higher U.S. tariffs of up to 15% in exchange for bilateral agreements totaling hundreds of billions of dollars in energy or investment commitments. Cite Turn News 25. Inflation impact and Fed considerations. Multiple analyses indicate that tariffs of this magnitude are not benign. The Yale Budget Lab estimates U.S. tariffs in 2025 could raise consumer prices by roughly 1.5 to 2.3% in the short run, depending on pass-through assumptions. Cite Turn Search 3, Turn Search 1. The Boston Fed projects that a similar pattern, 10 to 25% tariffs, could boost core PCE inflation by at least 0.5 percentage points, possibly more if markups rise. Cite Turn Search 7. So tariffs are a real inflation tailwind, both via direct price effects, import-heavy categories like appliances, apparel, and indirect second-round effects. How the Fed might adjust its roadmap. The Fed has already expressed concern about trade shocks complicating their inflation fight. Powell has warned tariffs might lead to higher persistent inflation, complicating a return to 2%. Cite CERN News 33. Data sensitivity. Sequential CPI and PCE prints post-August will be critical. Revised policy outlook. Considering tariffs, given these trade dynamics, here's how we refine the roadmap. Soft landing still preferred, but the starting point for cuts shifts later or a bit slower. Cut path shifted. If inflation does fade below 2.5% and wage growth solidifies, rate cuts in November or December remain likely, but perhaps only 25 basis points, not a full easing cycle. Strategic summary. Trump's tariffs, effectively locking at 15 to 17%, are now a policy fixture, not a transitory shock. Let me know if you'd like a charted probability timeline of cuts based on CPI, PCE, and tariff pass-through models, or a trade strategy overlay.
All right, so that's enough of that. So let's see, where are we? Fed policy roadmap. Actually, let's get back down to here where after we had that conversation. So tariffs, we're at 15%. Now it's taken into account inflation impact and Fed considerations. Multiple analysis indicates that tariffs of this magnitude not benign. Yale says 1.5, Jesus Christ, 1.5 to 3% into 2.3% in the short run, depending on pass-through assumptions. That's those certifications that he keeps reading, which is so annoying when he's talking. Boston Fed projects a similar pattern, could boost core PCE, so tariffs are a real inflation headwind, how the Fed might adjust its roadmap. Elevated tariffs make the Fed more hesitant to cut prematurely, even if growth weakens. With inflation likely elevated via import prices, the Fed may hold steady longer than the markets expect. Sequential CPI and PCE prints post-August will be critical. And again, it's not the ones coming up. We're getting reports coming up, but they're useless because they're looking backwards. They're not for this month. We're not going to get the current data for another month. CPI and PCE prints post-August will be crucial, not the ones coming up. And of course, the headlines are going to focus on the ones that are coming up and act like they matter. Revised policy outlook on considering tariffs. Soft landing still preferred. Cut path shifted. If inflation fades below 2.5, cuts in November or December remain likely. And when does the Fed have meetings? That's important to remember also. That's it. There's only these two more meetings after the September one. So that's why everybody's, hoping that there's going to be still 65% likelihood that we have a rate cut in September, but that's going to depend very, very much on the PCE and CPI and so on reports, the inflation bearing reports that you're going to see right before this, the ones that report on August. Doesn't matter what these reports in August say, it's the ones that come out in the first 2 weeks of September that will give us an indication, hopefully, of what's going on. But it's probably not the right time to cut. I don't know, though, that it's not the Powell needs the votes, because the only two people that dissented were the people who want his job. So it's not like everybody's against Powell on this thing. Everybody's with Powell except for the two people who are kissing Trump's ass. So that will not change. They are going to make their same decision that they're making now in October, because they've already hung themselves. Everybody who didn't dissent now is never going to get picked by Trump. So that's it. The 10 people, well, the 9 people, actually, Kugler, she ran away. So one of them ran away. So let's so we have one chicken, we have 10 dissenters against Trump, or 9 dissenters against Trump, and we have 2 people who are kissing Trump's ass. That's what the Fed looks like now. But hey, lo and behold, he won over the Supreme Court. He sticks with it. He's like a freaking dog with a bone. I mean, he's gonna keep pushing at this thing until the court starts voting with him. So we'll see how that goes. But meanwhile, so if we skip September, the next one is October and then December, and that's it for the year. So those are your chances to lower rates in 2025. But there is no logical reason to lower rates, especially when you've got the stock market is raised. The labor market is still very strong. The stock market is ridiculous. It's overheatingly strong. So borrowing costs should be higher. That's how things should work. But we're not there at all. Oh, and look at that. The Dow's not even up right now. Oh. The Nasdaq's up 93. The NYSE is down. The Dow's up 5 points. That's very sad. The S&P is up 12 points. That's also very sad. The dollar is 99.38. That's basically flat. It was right about there this morning. Oh, and this guy on CNBC, is this Santelli, talking and talking and talking. And then we're waiting for Powell. Don't forget, Powell's going to speak soon. So then we'll see what he has to say in a few minutes. So how are we doing? Anybody got questions? Nobody's got questions. All right. All right, well, I'm fine with taking a nap, so. I got 8 minutes. I can take a nap right now. I've been up since, was it 3 or 4? Anyways, I think it was 4. I think I was up at 3 and I went back to sleep, and then I got up at 4 and I couldn't get back to sleep. So I'm tired. I will admit that. But it's Wednesday, so all downhill from here. What else is happening? This is also useful news, right? And just go pay. Yeah. Now he can only see, he meaning Gemini, he can only see what you can see. So if you don't expose it, in other words, if you go down, and the last story is what? The last story is today at 1:30 p.m. So if you can't see past 1:30, he can't see past 1:30. He can only see what's on your page, and he has problems scrolling up. He has to get used to some of these things. So don't assume that he can scroll up. You got to go back to the top. So 12:24. I want to get back to like the morning. Wow. Holy cow, a lot of news today. $9:30. All right. 8:30, right, close enough. So now I'm going to go all the way back to the top, and I'm going to tell Gemini, looking at the news since the open, what are the 10 most market moving news stories, and for each one, what stock do you think would benefit for a swing trade bet, and why? Right, so looking at the news sources since the open, what are the 10 most market moving stories, and for each one, what would be the best swing trade bet to make? And don't forget, you can't go by what it says, because this is just an AI. It's not an AGI like the ones that we use, in the chat. Because this is not my main computer. This is just a standard crap you get off the web. That even Warren is just a standard one you get off the web. He's not my main Warren. But as you could tell, he's pretty clunky. It threw me for a loop. I'm so used to like, bit, getting all my stuff. But the point being though, that this is a starting point. This is the beginning of looking, where you say, oh, here's some ideas. So for this moment exactly, I'm sitting down. Palo Alto is acquiring CyberArk. The swing trade is Palo Alto short. The acquiring company stock often falls after announcing a large, expensive acquisition. I don't know if I want to short Palo Alto based on the fact that they're acquiring somebody. And again, you got to, then you see, that's the thing. You got to think about whether or not what the AI is saying makes any sense. So we look at PanWest. And they are down already 5%. They spent $25 billion. Their market cap, that is significant. That is a large piece of their market cap, right? That's 20% of their market cap they spent to acquire CyberArk. And is CyberArk even public? I don't think they are. Cyber. Oh, there they are, Cyber. So what did they acquire them for? They were at 380, and they bought them for whatever they bought them for. I mean, it's not clear. Well, they bought them for 25 billion. So 25 billion, there's that many shares. It's easy enough to figure out, right? So it's easy enough, but I'm going to still use a calculator. So 25,000 million divided by 49.46. 49.46 is 25. What did I do wrong? The market cap is 25 billion. The purchase price is $25 billion. $25,000 million divided by 49.46 million shares is 505. So that's very interesting. So their offer is $500 a share. And so far, it's only up to here. Is that because it's stock? We don't know. Why? The acquiring company's shareholder dilution and integrated risk, PM EST shares were already down 4% on the news. This downward pressure could continue with the short term, blah, blah, blah. Well, now, we don't know for sure, but if they're doing a stock deal and they're offering 505 and ArcWest or CyberArk is trading at 100 times earnings already. And PNW is no bargain either. PanBargain was trading at 50 times earnings, forward earnings. So they're absorbing a company that is 25% of their entire market cap. And that 20% market cap is twice as bad as they are at making money per share. So it's not what you would call accretive. It's actually diluting and making it worse. So yes, I agree with this logic. It is very possible that we're gonna get back to like 170, 150 range on PanWest, which is very interesting because it's generally a good company, but this is going to be a tough pill to swallow for them, basically. And then we do a little bit more research. And we say PanW. So 52 times forward is correct. They're making $2.3 billion a year. They have cash, but they don't have 25 billion in cash. All right, so then we'd want to get the details of the thing that happened. And there's very scant details here, so you're better off with these going down in the news over here. Whoa. Cash and stock. Under the agreement, CyberArk will receive 45 in cash and 2.2 shares of Palo Alto. So I don't like this at all. They're giving them, what do we say? They got like 50 million shares, right? So back to the calculator. So it's 50 million times 45 is 2.25 billion. They're giving them all of their cash. That's what this deal is. They're giving them all their cash and the rest in stock. And so as a CyberArk, as a PanWest shareholder, what are they doing to you? They are going to dilute you by 2.2 shares. Well, they're going to dilute you by 2.2 times 50 million shares. So 2.2 times 50, 110 million shares, and we've already determined that there's 600 million shares. So basically 20%, that's what we said. So it's 20% dilution to your shares. And it's not accretive. In other words, you're not getting business that's doing better than the business you have now. You're getting business doing worse than the business you have now. And you're giving up 20% of your shares to get a worse business. So you're not improving, you're losing your 20%. You are getting diluted by 20%. The earnings coming in are not covering it. Let's say they're half covering it, you're getting diluted by 10%. All right, so we fell from 204 to 180. That is correct. We should have fallen at least 10% based on that. But you also gave up all of your cash. Where did your money go? You had 2.9, that's I'm sorry, that's debt. You have 1.6 billion in cash, in cash net of your debts. So you have cash minus your debt. You just gave all that away. You have no cash. Why? Why do you need this so badly? So that's what we'd want to look into, is why are they doing this? But Pan West deserves this sell-off for sure. Harley Davidson. So see, anyway, the point being, as we're coming up to Powell, oh, there he is. Sorry. But the point is, that's a starting point for having some very interesting looks at what's going on.
4.5%, and to continue reducing the size of our balance sheet. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to show through more clearly to prices of some goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation could be short-lived, reflecting a one-time shift in the price level.
Short-lived?
But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to keep long-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. For the time being, we're well positioned to learn more about the likely course of the economy and the evolving balance of risks before adjusting our policy stance.
We want to learn more before we adjust anything. That makes sense.
Inflation risks. We're also attentive to risks on the employment side of the data. In coming months, we will receive a good amount of data that will help inform our assessment of the balance of risks and the appropriate setting of the federal funds rate.
GE Healthcare down 6%.
Its discussions as part of our 5-year review.
Mondelez down 5%.
We focused on potential.
Generac up 20%. They knocked it out of the park.
Policy strategy.
Told you so.
On track to wrap up any modifications by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal.
Oh, yawn.
And keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Well, that was it. Oh, and he uses an iPad. That's
Thanks,
cool.
thanks, Chappelle. There's a lot of lean in the markets, not to mention out of the administration for a rate cut now in September. Is that expectation unrealistic at this point?
So, as you know, today we decided to leave our policy rate where it's been, where I would characterize as modestly restrictive. Inflation is running a bit above 2%.
Inflation is above
even
2%.
Tariff effects.
That's
The labor
important.
market's solid.
Excluding tariff effects.
Financial conditions are accommodative, and the economy is not performing as though restrictive policy were holding it back inappropriately. So
You hear that? The economy is not
to almost
behaving as if the
that
Fed's
economy
policy
not
is holding
performing
it
as our
back.
restrictive policy is holding it back inappropriately.
Oh, he just
and
repeated it.
modestly restrictive policy seems appropriate.
Policy
Although
seems
there's also
appropriate.
downside risk to the labor market.
That's not going to be the popularity indexes.
Receive a good amount of data that will help inform our assessment of the balance of risks and the appropriate setting of the federal funds rate.
See, the data will inform him.
Months, does that include the possibility you'll be getting essentially 2 rounds of jobs and inflation data between now and the September meeting? Is that potentially adequate to make a decision to lower rates at that point?
So you're right, we do have, this is an intermeeting period when we'll get 2 full rounds of employment and inflation data before the time of the September meeting. We have made no decisions about September. We don't do that in advance. We'll be taking that information into consideration and all the other information we get.
Labor market conditions have remained solid.
Thank you, Mr. Chairman. You took out the word or the notion that uncertainty has diminished from this statement. Does that mean uncertainty has increased? And I'm just wondering, the administration has struck several deals with large trading partners where it seems like we now know what the rate is going to be. Does knowing that rate add to your certainty to change policy, or do you need to wait to see the economic effects?
So essentially, the statement in our statement about uncertainty reflects what's going on since the last meeting. So at the time of the last meeting, uncertainty had moved down a little bit, but it was more or less even this time. So we took out, had diminished because it didn't diminish further. So there's not really much in that. And then your second question is, say again?
There have been several deals that have been struck, and now we seem to have an idea of what the tariff rates are.
So the question is that
some of our large trading partners.
now we have more clarity on tariffs. So why is the Fed still acting like they need clarity?
So you're right, it's been a very dynamic time for these trade negotiations, and lots and lots of
Bitcoin 20,000.
But we're still, a ways away from seeing where things settle down. We are clearly getting more information.
20.
And
120.
I think at this point, people's estimates, our estimates, outside estimates of the likely, effective level of tariffs is not moving around that much at this point. But at the same time, there are many uncertainties left to resolve. So yes, we are learning more and more. It doesn't feel like we're.
So essentially saying we're getting more information, but this is not clarity.
But it feels like there's much more to come, as well looking ahead.
All right, I think that's enough to see where this is going. Usually, at some point, Powell says something that spooks the market. So far, he's doing good, but usually there's something. Look at these bounces. Oh, this is a bullshit spike on the 5-minute charts, right? Look what happened. So they're trying to take it higher, but it's not really working out. 45 freaking thousand for the Dow up here. That's crazy. All right, so where were we? We were talking about how to make money on stuff. So you see how cool this is, though? It's just one little thing, and I'll put it into the chat because this is something you can always use if you have Chrome. Even if you don't have Chrome, you could paste the block of news into the browser you do have, the AI you do have. Where is this? Oh, if I go to questions and I go somewhere, I think I have to respond to somebody. So let's just respond here. And I'm going to hit that, and I'm going to send that to everybody. There you go. So that's the prompt I just used to get that information. Larry says, how do you adjust a credit spread that deep in the money that went in our favor but is 1 year away? Well, it'd be easier if I had an actual thing to work with. Ask me in chat. I'll be happy to do it in chat, and I'll even have Warren do a lesson on it. But there's a big thing of like, it depends. You have to realize that it depends on what stock went up, how much, and what do we think it's going to do next, and was the amount that it went up justified, or did it not go up enough, or is it going to continue to go? Was there a fundamental change in our outlook for the stock based on what it just did? You can't, there's no like saying this is what you do when the stock goes up. That's nonsense. Why did it go up? What are the new fundamentals? What do we expect in the next 3 months, 6 months, 9 months, 12 months? You have to know all these things. You can't just say, if this happens, then do this. You know, and that's really the problem with any trading, but especially with options trading, because you have to know what you're doing. You can't just, these are the power tools. Okay, when you're trading stocks, you got a hammer and a nail, and you use the back of the hammer to pull the nail out, and use the front of the hammer to put the nail in, and that's basically it. You're gonna either buy a stock or you're gonna sell the stock. Those are your tools. There's only really one tool. It's the back and the front of the hammer. So there's not much to learn. But with options, now you can cut your fingers off easily. Now you got the power saw and the power screwdriver and all the other things, and the bench with the saw that cuts your arm off, all these things. So you now have to be much more careful. You have to be much more precise. You have to understand how to use the tools that you're using, and you have to consider all the factors, right? Like when you're using a you can tell them not to tool that. When you're using that circle saw thing. So when you're using a circular, I guess it's called a circular saw, but when you're using a circular saw, you have to understand the concept that, see, I know a little bit about it. You have to understand the concept that when you put the saw into wood that has like a knot in it, the knot has a different density than the rest of the wood. And if you screw that up, you're going to have that thing, you know, you're going to hit that knot and the thing's going to kick up at you or go sideways or whatever. And you can ruin your project or ruin your face, you know, one of those things. You got to understand that. And that's what options are. Options are the power tools. And there's no easy thing, and that's exactly the same thing. It's like when I'm using it, you know, when I'm using a circular saw and I'm going down to cut some wood and taking some planks and trying to, you know, shear them off or whatever. And then what do I do in this situation? It's like, well, is the wood wet? Does the wood have knots? How dense is the wood? How long is the wood? How thick is it compared to where you're cutting? How much stress are you putting on it? Did you clamp it on both sides? There's a lot of questions. You can't just say always do this. That's crazy. There's 500 types of woods, and there's all kinds of shapes and sizes, and it depends on the project and this and that and blah, blah, blah. That's where we're at. So the best thing to do is to like go and chat, give us some specific examples, and let's work on some of those specific examples. Because, you know, there are ways to adjust it, and there's also times to say, you know what, this got away from you. You're not going to adjust it. Just cash out, be happy, and have a nice day. You can't always adjust everything. You know, there's certain things you just have to accept and move on. You say, okay, well, I didn't make as much as I expected, but I made some money. I'm happy, and this is no longer productive use of the money I have. Oh, look what's happening now. Holy cow. Look at that. They flew right up that spike. They're flying right up to where that spike was. Although the S&P just changed its mind. It's all based on whatever the last thing Powell says, like question by question. What's he saying? So Powell just said increased tariffs are pushing up prices. Changes to government policy continue to evolve, and the effects on the economy remain uncertain, blah, blah, blah. All right, so whatever Powell says lasts, unless he says something that's profound that sticks. But anyway, so where were we? Whoa, where's my stuff? Oh, here we go. So Harley-Davidson soars on major financing deal. Harley-Davidson had a financing deal. The stock's up 16%. Holy cow. Really? You know what's funny about Harley is, oh, that's the wrong thing. There it is. It's funny about Harley is they sell electric bikes now, so you can't really tell. Like I was just gonna say, I don't think as many people ride Harleys anymore, but how the hell would you know? They don't make the noise anymore. So It's a bit hard to tell. So Harley, under 10 times earnings and something profoundly good happens to them, this is probably a good time to get in, but that also depends. Now I got to find out, do they have good, are the sales good? But they got a financing deal with KKR and PIMCO that improves their balance sheet, enables large share buybacks. So at under 10 times earnings, they're going to buy back their own freaking shares. The news overshadowed weak quarterly results. Powerful momentum that could attract more buyers over the next several days or weeks. So Gemini likes it for a swing trade. I'm concerned as to their overall business after an earnings miss. Wow, look at that, missed by 30%. So I'm not sure I would want to jump back into Harley here. On the other hand, though, overall, look at the business, look at the history, look at what's been going on. Where are they? And how? And what about the benefit? And again, they probably have the same problem Whirlpool has. Everybody who's buying bikes right now are buying foreign bikes. They don't want to buy. No, but there's no rush to buy American bikes. There is a rush to buy foreign bikes because you're not going to be able to in a couple of months. Harley is still going to be Harley in a couple of months. Teradyne jumps as AI demand booms. Tariff fears ease, so Teradyne could be in a good spot. Shares. Look at these reactions we're getting. 20 freaking %. That's crazy. But Teradyne's already 24.30, so you know it's priced for growth already. How much of a game changer is this? They jumped on strong fundamental story. Obviously, the earnings, big beats, right? Nope, not a big beat. EPS was. The GAAP EPS was right there. There's the top line earnings, the GAAP EPS is 3.7, and the revenue is flat. So not really impressive, nothing impressive here. But on the other hand, the inline expectations were for nice growth. So 24 times forward earnings is still pretty good. This kind of powerful narrative driven move can have follow through. More investors rotate into the name, that's true, and then they get upgrades from people and so on and so forth. So yeah, that's definitely playable. And look what happened. This is what we call, this is what us professional traders call a triangle squeezy thingy. So when you see the converging resistance lines coming like that and the stock starts consolidating in there, it's going to pop either up or down strongly. And it's exactly what it did. It just popped up 18, 19%. And that was well deserved. So the trick is to catch these beforehand and see that you're heading into one of these things. And then you say, well, what's more likely? Which way do I want to play it? Peloton, I'm already skipping this one, frankly, but let's take a look. Shares jumped 18% following analyst upgrades by the UBS note provided clear thesis for improved future profitability. Such a strong endorsement can change a thing. These are all very nicely, you know, it's a good job by Google with the Geminis, I'll tell you. Who did we say? Peloton, Piton, right? Ooh, that's pain. That's when you gotta look at the weekly chart. Oh man, ow, that's brutal. They don't make any money. That's when you see that they don't make any money. This thing's up freaking 16, 17%. They don't actually make money. Not for me, thank you. But I said that, didn't I? I said when I saw Peloton name, I'm like, that's a skip. Holy shit. Wow. Okay. Again, they've never made money. Okay. They were hot while we were stuck home for COVID, and they had a couple of years where they sold a shit ton of these bikes. Now these bikes are what? They are clothes dryers, right? When you get out of the shower, you throw your stuff on the Peloton and it dries. That's what they're for. So they've steadied out to about $2.5 billion of sales, but $2.5 billion of sales is a loser for them. They even at this amount, they weren't making money, But let's say they got their shit together, they still can't make money at 2.5 billion. They're not going to be able to cut their way to profit at this. This year they say they're going to lose 10% on every sale. Next year they say they're going to lose, was that 5% on every sale? So good for them. But is that a company you want to put money into, that they hope to lose 5% on every sale if everything goes well? And what's the narrative here? Analyst upgrade to buy. UBS provided a clear thesis that, this is a Tesla thing, right? The thesis for future profitability. If they can get the robo-taxi to work, and if they don't run people over on the street, and if the insurance isn't a nightmare, and if people are willing to let people have sex in the back of their cars while they're sleeping, then they could make some money. That's Tesla's thing. Elon Musk must be suing them over this. You're not allowed to have the what if and maybe and hopefullys and this and that for these things. So I don't think so. It's gym equipment. What gym equipment company? Oh, Bally's. What gym equipment company ever got super rich? Bally's did. They started out as like a gym equipment company. But you know what? They probably made more money on the video machines and on the game machines than they made on the gym equipment. FDA's head of biologics departs. I would say kill me now, but it's being done. It's being done for us. FDA's head of biologics departs. Oh my God. Boosting in battle biotech. Sure, because now you don't have to pass those pesky FDA reviews. That's so great. So that's good for Sarah too, who's having a hell of a week. So not only are they getting a pass on killing somebody, but SRPT, right? Not only are they getting a pass on somebody dying in their study. What is going on here? Sarah to SRPT. Why are you not showing that up when I hit it? SRP. I'm confused. Oh, there they are. Oh, it's really not that good of a week. Or again, they're a very beaten up company. Or PT. Yeah, see, they've been completely trashed. And again, they don't make any money, but they expect to make money next year. So this is actually a fun one. Now, this is one I would say, sure, why not buy a call? Why not take a flyer on these guys? They might actually pull this off, and this is great news for them. The stock rallied 14%. The FDA departure, the official was seen as a regulatory headwind for the company's gene therapy drug, Elvis, apparently. This event-driven catalyst removes perceived obstacles. The market may continue to price the stock higher. The approval pathway for the for treatments is now seen as clearer. So they got a chance of getting their drug approved, and if their drug gets approved, they're going to make 10x less. They're going to be less than 10x price next year, and again, that leads to more approvals and more drugs, and obviously, you know, one of the big pharmas will step in and buy them because they're only $2 billion. So many good things here. So if the risk is removed and they are actually allowed to sell something, then it's a no-brainer for Pfizer or Merck to say, oh, okay, thank you, welcome to the family. You know, here's $3 billion, $4 million. So absolutely, this one is worth doing a swing trade. That's a really good one. That's a fantastic suggestion. Someone remind that in chat. We'll pick it up. Oh yeah, because it's 3 o'clock. Holy shit. No time to do it here. Avis Budget Group plunges on headwinds. Oh, that's the lot of factors there for tourism, vacation, so on and so forth. Wouldn't go near them. Humana rallies, raising their outlook. And again, it's in the same space basically as UNH. So This is good for UNH. It's good for Humana. I like Humana. Old Dominion Freight Line, they hit a low on the earnings miss. All these freight guys, all the shipping people are doing badly. That's a terrible economic indicator, folks. Terrible, terrible economic indicator. Solar Edge surges. That's surprising on a rooftop solar deal. Largest ever rooftop solar installation. This is significant, tangible. That's something I'd want to look at. Who did they make a deal with? Fed holds rates, but Descent opens up. That's interesting. I asked him to find me stocks. Oh, no, I didn't. I asked him to find me trends. And he picked up on this, but Descent opens door to future cuts. Swing trade, long the financial sector, the XLF. That's not a bad suggestion. All right, so ways we can use AI to our advantage. We got a great report from Warren. He came through after the first faulty thing, and he gave us a nice report, told us what was going on. As it stands now, this does not look pretty. As I said, if Powell keeps talking, the market starts dropping, and that's where we are now. But there's still obviously many, many opportunities. That's what's great about this stuff. So Sarita and I already forgot. Frick, not Peloton. Sarita and Solar Edge, right? Yes. So let's check out those two when we get back to the chat room. Thank you everybody for coming. This was fun and exciting, and we'll do it again. Oh, wait, I was going to show the futures. Oh man, everything turned down. Oh Jesus, what did he say? All right, back to the chat room. And again, this is what AI is good for. What the frick did this guy say? Let's find out. So I'll see you back in chat. Thanks, guys.